Alright everyone, welcome back to the channel. Today we're diving deep into a company that's been making some serious waves in the electric vehicle space, and trust me, you're going to want to hear this. We're talking about Lucid Motors. Now you know the EV market is absolutely exploding, it's reshaping the entire future of transportation as we know it, and Lucid is one of those names that keeps popping up, sparking a ton of investor interest and for good reason, which we'll get into. They're positioning themselves as a premium player, a luxury brand in a world increasingly dominated by electric power. So what's the deal with Lucid? Is this the next Tesla, a groundbreaking innovator poised to deliver massive returns for investors? Or is it a company facing an uphill battle in an already crowded market, with risks that might just outweigh the potential rewards? Today, we're going to unpack all of it. We'll look at why Lucid could be a really compelling investment opportunity, what makes their technology and their cars stand out from the pack, but, and this is a big but, we're also going to get real about the significant risks you absolutely need to be aware of before even thinking about putting your hard-earned cash into this stock. No fluff, no hype, just the straight facts and my honest take on what you need to consider. We'll look at their cutting-edge tech, their financial backing, which is pretty substantial by the way, and the challenges that lie ahead. It's a fascinating story, and whether you're a seasoned investor or just EV curious, there's a lot to learn here. So, grab your coffee, get comfortable because we're about to break it all down. Let's get into it. So first things first, let's talk about what Lucid is actually selling, because their product, specifically the Lucid Air, is a massive part of their appeal. This isn't just another electric car, guys. The Lucid Air is their flagship sedan, and it's designed to compete squarely in the luxury segment. Think Mercedes S-Class, BMW 7 Series, but fully electric and packed with some insane technology. From the moment you see it, it screams premium, with a sleek design, a luxurious interior, and an attention to detail that's clearly aimed at a discerning buyer. They're not trying to be the cheapest EV on the block, they're aiming for the top shelf, and that's a very specific strategy that sets them apart from many other EV startups. Now, one of the headline figures that gets everyone talking about the Lucid Air is its range. We're talking over 500 miles on a single charge for some configurations. Let that sink in. That outpaces many competitors, including even some of Tesla's long-range Model S variants. For a lot of potential EV buyers, range anxiety is still a very real concern. So having a car that can go that far is a huge selling point. It's not just about a big battery, it's about efficiency, which we'll touch on more. But this kind of range makes electric vehicles a much more practical option for a wider range of people, especially those who take longer trips or just don't want to be thinking about charging all the time. Then there's the performance. Lucid isn't just about cruising silently in luxury, they're also packing some serious punch. Take the Lucid Air Sapphire, for example. This thing is an absolute beast, delivering a mind-blowing 1,234 horsepower. That's supercar territory, folks. It can do 0 to 60 in under 2 seconds. So, they're managing to blend that extreme luxury with face-melting performance, which is a combination that really resonates in the high-end automotive market. It shows they're not just assembling parts, they're engineering vehicles that can compete on multiple fronts, appealing to both the luxury buyer and the performance enthusiast. The secret sauce behind a lot of this, the range, the performance, the efficiency, is Lucid's proprietary electric drivetrain technology. This is key. They've developed their own motors, battery packs, and power electronics in-house. Their CEO, Peter Rawlinson, was the chief engineer for the Tesla Model S, so he knows a thing or two about EV tech. This vertical integration and focus on core technology means they're not just reliant on off-the-shelf components. Their systems are incredibly compact and efficient, which allows them to achieve more range with a given battery size, or more performance, or a more spacious interior because the components take up less room. This is a genuine technological advantage. Ultimately, this in-house, cutting-edge technology gives Lucid a real, tangible edge in a very competitive industry. It's one thing to design a nice-looking car, it's another thing entirely to engineer the underlying technology to be best in class. This focus on efficiency and power density is what many analysts point to as Lucid's most significant differentiator. It means they're not just a car company, they're a technology company that happens to make cars. And in the long run, owning that core IP could be incredibly valuable, potentially even opening doors to licensing their tech to other manufacturers down the line. It's a long-term play based on engineering prowess. Alright, so Lucid has these impressive cars, but making amazing electric vehicles is incredibly capital intensive. You need billions, literally billions, to design, engineer, tool up factories and scale production. This is where Lucid's financial backing becomes a critical piece of the puzzle. A huge chunk of their funding, and indeed their ownership, comes from the Saudi Public Investment Fund, or PIF. The PIF owns roughly 60% of Lucid. Now, this is a double-edged sword for some investors, but there's no denying that having a sovereign wealth fund with incredibly deep pockets as your majority shareholder provides a level of financial stability that many startups can only dream of. This backing from the PIF has translated into billions of dollars in funding for Lucid. This isn't just pocket change, it's the kind of serious capital injection needed to build a global automotive company from the ground up. This money is being poured into crucial areas like scaling production at their Arizona factory, continued research and development to maintain their technological lead, and expanding their global footprint. In the EV race, cash is king, and having access to significant patient capital can be the difference between success and failure, especially when you're burning through money in the early stages, which Lucid definitely is. Speaking of production, Lucid's main factory is in Casa Grande, Arizona. They've been working hard to ramp up production numbers there, though it hasn't been without its challenges, as is common with any new manufacturing operation. But the ambition doesn't stop in the US. A key part of their strategy, and likely influenced by their major investor, is their expansion into Saudi Arabia. They're building a new manufacturing plant there, with plans for it to be operational by 2026. This move is strategically important. It gives them a foothold in the Middle East, a market with growing demand for luxury goods and EVs, and potentially lower manufacturing costs or other incentives. Beyond the money, you also have to look at the leadership. As I mentioned, CEO Peter Rawlinson is a big name in the EV world, having previously served as VP of Vehicle Engineering at Tesla and Chief Engineer of the Model S. Having someone with that kind of track record and deep understanding of EV development at the helm is a huge asset. It lends credibility and suggests a strong engineering-first culture within the company. You need more than just a good idea. You need experienced people who know how to execute, especially when you're trying to take on established giants and a flood of new competitors. And Lucid isn't just stopping with the Air sedan. They're looking to broaden their market appeal with upcoming models, most notably the Lucid Gravity SUV. This is a smart move. SUVs are incredibly popular globally, and an electric luxury SUV could significantly expand their customer base. The Gravity will put them in competition with vehicles like the Rivian R1S and the Tesla Model X, but also potentially draw customers from traditional luxury SUV brands. Diversifying their product line is crucial for long-term growth and reducing reliance on a single model, no matter how good it is. It shows they're thinking ahead. Now, despite the impressive tech and strong backing, investing in Lucid is not for the faint of heart, and we need to talk seriously about the risks. Let's start with the stock performance. Lucid's stock, ticker symbol LCID, has been on a roller coaster, to put it mildly. It saw some incredible highs back in 2021, driven by a lot of hype and EV market euphoria. However, since then, it's come down significantly. For early investors who got in at the peak, it's been a painful ride. For new investors, the lower price might seem attractive, but that volatility is a clear indicator of the market's uncertainty about the company's future and the high-risk nature of this investment. A major reason for that uncertainty is Lucid's cash burn. Building a car company from scratch, especially one focused on high-end technology and luxury, costs an astronomical amount of money. Lucid is burning through cash at a rapid rate. We're talking about losses in the billions. For instance, reports indicated around $2 billion in losses in 2024 alone. While this is expected for a company in its growth phase, investing heavily in R&D and production scaling, the path to profitability is still years away by most estimates. Investors need to be comfortable with this long runway and the possibility that they might need to raise even more capital in the future, which could dilute existing shareholders. Then there's the competition. The EV market is getting incredibly crowded, incredibly fast. You have Tesla, the established leader, still innovating and aggressively cutting prices. You have Chinese giants like BYD rapidly expanding globally with a wide range of EVs at different price points. And let's not forget the legacy automakers, Ford, GM, Mercedes-Benz, BMW. They're all pouring tens of billions into their own EV programs and leveraging their existing manufacturing scale, brand recognition, and dealer networks. Lucid is trying to carve out a niche in the luxury performance segment, but it's a segment that's also attracting a lot of these big players. On top of direct competition, there are broader operational risks like supply chain issues. We saw how global supply chain disruptions impacted the entire auto industry over the past few years, and while things have improved, these vulnerabilities can resurface. Any significant disruption to the supply of critical components like batteries, semiconductors, or even basic materials can slow down production, increase costs, and impact Lucid's ability to meet its targets and delivery schedules. This is a constant operational challenge for any manufacturer, but especially for a newer company still scaling up its operations and supplier relationships. Finally, we can't ignore the macroeconomic environment. High interest rates, for example, can have a twofold impact. Firstly, they can dampen consumer demand for big-ticket luxury items like a Lucid Air, as financing becomes more expensive. People might delay purchases or opt for less expensive alternatives. Secondly, for a company like Lucid that is still burning cash, higher interest rates make borrowing money more expensive, potentially impacting their future financing options or the terms they can secure. The overall economic climate, inflation, and consumer confidence all play a significant role in the outlook for luxury EV sales. So, after breaking all of that down, the big question remains: should you consider investing in Lucid Motors? Well, as you've heard, it's a complex picture. On one hand, Lucid offers a compelling bet on genuinely cutting-edge EV technology, particularly with their leading range and efficiency. They have very strong financial backing from the Saudi PIF, which is a massive advantage for a company that needs a lot of capital to grow. And they're targeting the lucrative luxury EV market, which is expanding. It's a vision of high-performance, high-tech, sustainable luxury. However, this is definitely not an investment for the faint-hearted. The stock has been incredibly volatile, and the company is still a long way from profitability, burning through a significant amount of cash. The competition in the EV space is absolutely fierce, with giants like Tesla and a host of legacy automakers all vying for market share. If you truly believe in the long-term potential of the EV revolution and specifically in Lucid's vision and their technological prowess to carve out a sustainable niche in the premium market, then it could be a long-term winner. But you need to go in with your eyes wide open to the risks. If you want to dig deeper into Lucid Motors, I'd recommend checking out their latest quarterly earnings reports. That's where you'll find the nitty-gritty financial details and management's outlook. Also, keep a close eye on broader EV industry news and competitor developments as this space changes so rapidly. Do your own research always. What's your take on Lucid Motors? Do you think they have what it takes to succeed? Or are the challenges too great? Drop a comment below. I'd love to hear your thoughts. And of course, if you found this breakdown helpful, don't forget to smash that like button and subscribe for more investment insights. This is Invest Connect, helping you navigate the markets. See you next time.